Good afternoon, everyone. I hope you're having an absolutely lovely afternoon, and thank you for joining us for this panel on technology, media, and telecommunications as the final session of our UK Africa Spring Conference. It is my absolute pleasure to introduce this amazing panel, which is being chaired by Sandra Oyewole from DLA Piper, and she will be joined by Davidson Oturu from Aelex, Jennifer Mbaluto from Clifford, Janet Othero from OKlaw, and Benson Ngugi from Igeria and Ngugi Advocates. I will now hand over to Sandra to kick us off.
Thank you very much, Harry, and a very warm welcome to all who've been able to attend this final session for TMT. It is my great delight and pleasure to be chairing this session with a seasoned panel of experts. We will be talking about TMT. As you know, it is a vibrant and dynamic sector. That is evident from the fact that we have 100% compliance with the legal services, our great backdrop. I hear that we are the only session to have done that, so well done to everybody. It is the final session of the day, and we have saved the best for last. I will be asking our panelists a number of questions. They will be responding to those questions. And I will say to our attendees, if you do have any questions, please do type them into the Q&A box on your screen. We will come to those questions and we will aim to answer them towards the end of the session, in the last 15 minutes, so to speak. So without further ado, I'm going to go straight into our questions. And this particular question is rooted in lawful compliance of collection of data. And I'm going to come to Benson on that. Data is the new oil. Data properly collected and processed can be immensely valuable. And we know that the GDPR was promulgated not too long ago, a couple of years ago. We also know that many African countries have passed their own data protection laws, some of which are actually modeled on the GDPR. So Benson, bearing in mind your own work with regulators in Kenya, I'm going to ask you this question. What are the developments in technology laws and regulations in Africa, and how do they affect the conditions for the lawful processing of data and information?
Well, thank you so very much, Sandra. That's a very, very good question. And a very good afternoon to everybody who's watching. I'm coming from rainy Nairobi and happy to be here. Now, as far as the TMT sector is concerned, I think, like rightfully said, data is a new oil, and therefore there is a drive to try and regulate how data is used, and that's the main area that laws are going towards. But having said that, and I think we'll see this as we go through this panel, I think the TMT sector technology will always be ahead of the law. It's always a step or two ahead of the law, so that the law is always trying to do a catch-up. But I think the law has done pretty well. GDPR came in, we have nearly so many countries in Africa, having laws modeled around the GDPR. The challenge for me is how to localize them, but I'm happy that probably about half African countries have model laws, the other half are working towards it. If you go to the second part of data, which is a risk you have, it's about cybercrime. We are in the middle of a pandemic. I think most people are in the second or third wave. And Interpol will tell you that cybercrime, which has to do with stealing data, has gone up probably 300 times. Now, the new developments that have come is that countries now are trying their very best to pass laws that look at cybercrime and figure out how to deal with it so that data is protected. If you look at Africa, you have a few countries that are looking at this. I know, and probably I'll defer to you, Sandra, to come back, that you have the Nigerian Electronic Transaction Bill. I'm hoping it's already become law. I know you have the Uganda National Payment Systems Act of 2020, which is to do with another element which is important, which is to do with issues to do with mobile money. I know we have the Tanzanian Electronic Postal Act, which is going on. We have the Kenya Data Protection Act and many more. And I know that the AU is at the forefront of pushing and lobbying to ensure that all the African countries have data protection law. We have companies that operate cross-border, so we have regulation going towards that way. So do we have developments in law and regulation? Yes. Are they the same? No. Everybody is still doing their own piece. Is there room to try and harmonize them? I think that's the future as far as this session is concerned, but there's quite some progress on this, Sandra.
Thank you very much, Benson. Very good points. And it's clear that a lot of advocacy needs to go on across the continent. Janet, I would actually also like you to share your thoughts on this particular question, bearing in mind the work that you do in data compliance. And Benson did mention something very important relating to cybersecurity, and I know you've done a lot of work in those areas. So over to you.
Yeah, Benson is very right. And I think I'll just give the Kenyan scenario where we first enacted the Computer Misuse and Cybersecurity Act. And then this was subsequently followed by the Data Protection Act. And this is on the basis of basically the African Union Convention on Cybersecurity and Data Protection Laws. Majority of countries in Africa have not ratified it, but have decided to opt for more of applying what the GDPR provided and just enacting their local laws. And within sections of these two sets of laws, there's the whole issue of international cross-border sort of assistance and also reciprocal sort of basic minimum legislation across different borders if you're going to be interacting with companies and entities in the different borders. Now, because of this, it becomes hard to do transactions cross-border if the country you're looking to transfer your data does not have minimum laws or is not compliant. Again, that's the same sort of pressure we felt when the EU GDPR was passed, and most European entities we were dealing with were asking for some sort of compliance, if not legally, contractually. So going forward, it's only a matter of time before all African countries have to comply as a way of doing business, because it's going to be one of those compliance sort of requirements or conditions precedent for any company that's looking to engage cross-border in payment systems or even transfer of data, hosting, residents, and all those things. So currently I'd say half the countries in Africa have enacted something around their way to something. This is in the last 2 years, 3 years. So in the next, like Mr. Ngugi put it very well, with the pandemic and a lot of businesses going digital, we are hoping in the next few years, Africa will be fully compliant in terms of local laws for data protection and cybersecurity.
Thank you very much, Janet. Some really good points there. And what just comes to mind is the African Union Convention on Cybersecurity and Personal Data Protection, the Malabo Convention, but that's another conversation. Now, Jen and I recorded a podcast for this conference 2 weeks ago. And in the course of that discussion, the matter of COVID-19 came up, as well as how digitalization has been accelerated. So Jen, I'm going to ask you this very next question, which is, with digitalization growing exponentially and the rise of global enterprises having access to consumer data significantly increasing, how do you imagine trust and privacy will be impacted in this digital age?
Thank you, Sandra, and thank you to everyone that has joined in. I'm really delighted to be here to have this very important discussion. Now, Sandra, let me first start with the issue of trust. And as you've correctly pointed out, you only have to look at the past year to really see how public trust has impacted, how public trust has been impacted when it comes to the use of data. This has been the year where we have, I think, both trusted and mistrusted how organizations use our data in equal measure. On the one hand, we've trusted governments with some of our most sensitive data, like health data, in an effort to emerge from this pandemic as quickly as we can. But on the other hand, this is the same year we saw a surge of consumers move from WhatsApp to Signal due to a rather ill-informed decision by WhatsApp to change its privacy notice in a manner that consumers felt was not sufficiently clear. Now, I think trust is intrinsically linked to privacy concerns these days. Privacy laws require organizations to be transparent about why and how they use consumer data. But in practice, we also see that some of these risks, like the WhatsApp incident, can be mitigated if business realize the importance of careful communication strategies that both inspire and assure consumers. Nowadays, you'll see pop-ups on your WhatsApp explaining these privacy changes and actually asking you to review them. I think that's a move in the right direction. And I think, Sandra, going forward, the expectations of safeguarding data will be extremely high, and that trust will need to be very well earned. Now, let me touch on the issue of privacy. And the first point I want to make is that privacy is an issue that concerns all businesses and organizations that handle data. Most of the focus, obviously, we see in the press usually involves scandals involving tech companies. But privacy is not just about big tech in this digital age. It's affecting all companies that handle data. And in fact, Sandra, the rules aren't really designed to only apply to data-rich companies. In the EU, for example, we saw H&M, which is the retailer. They were fined 35 million euros because their own employees implemented an internal program where they collected unnecessary information about people's sickness, holidays, family life, and religion. That case was not about H&M's consumers. It was about its own people. So we really should turn the spotlight from just thinking about privacy as an issue relating to consumer data, but realizing that these rules are important for all business interactions. Secondly, we've also seen a huge shift in public perception when it comes to privacy. Benson mentioned 2018 when the GDPR came into force, really marking the beginning of robust data protection regulation in this digital age. But this was also the year where we really saw with the Cambridge Analytica scandal, the extent to which personal data can often be used improperly and for unacceptable purposes. And so it is really good to hear actually from this panel, the extent to which Africa is embracing data privacy laws and actually moving on beyond, looking at it as a jurisdictional specific issue, but thinking about cross-border data flows and harmonization. But finally, Sandra, looking ahead, we're now seeing certainly in Europe, privacy begin to intersect with other trust enhancing rules and frameworks. And just this week, the EU has published a draft proposal for artificial intelligence. Now, this legislation will require organizations to do much more to inspire trust in high-risk AI, like making sure that the data that trains AI does not introduce unfair bias. Some of our clients and other organizations already have their own governance frameworks, so they've looked ahead and put in place their own frameworks to ensure ethical use of AI. Now, these draft laws and initiatives in the EU and the UK, I think, reflect a shift towards transparency, and we anticipate this becoming a globally accepted approach.
Thank you very much, Jen. Lots of points to unpack there, but I'm going to zone in on one thing in particular, which is the issue of trust. And what we found is that a lot of data protection and privacy practitioners are actually evangelists for data protection and privacy. And the responses so far to this question and the earlier questions just prove that point. Now I'm going to come to you, Davidson. I know that during the Data Privacy Week that was celebrated in Nigeria a couple of months ago, you had some very insightful and impactful things to say. So coming back to this question on trust and privacy that Jen has just responded to, can you share your own thoughts?
Thank you, Sandra, and good day to everyone there. I think Jen has actually said quite a lot on this, and I'll probably a few things that she referenced there. So the issue of trust is something that sometimes is even built over time. And I'll give an example, right? So Jen did mention the WhatsApp scenario. Now, a lot of people didn't take out time to read the new policy that was being set up by WhatsApp. And I think one of the reasons could be because they knew that it was coming from Facebook. Now, the question is, how do people view Facebook itself when it comes to the handling of personal data? Again, she mentioned the whole scandal against that happened with Cambridge Analytica. If we drill down to what happened in that particular scenario, what had happened was that Cambridge Analytica had basically harvested personal data of about 87 million Facebook users without their consent, and then used that content for political advertising, more or less. So they now use that to provide assistance during the Donald Trump campaign, as well as even Brexit. Well, there were allegations that the Brexit referendum, there was some tampering around that. Now, what happened after all of that? Of course, Cambridge Analytica had to file for bankruptcy. Facebook was fined, I think it was about $5 billion or so by the FTC in the United States. So we see that with that sort of background that Facebook had, when the WhatsApp privacy policy came on board, people were not ready to read it at all. There was already a deficit of trust, more or less, there. So everybody just said, you know what, they want to harvest our data for something else. I'll probably not be a part of it, and let me port to another direction. But we can look at people who actually use data in a way that is beneficial, and people don't mind sharing that data at all with them. For instance, let's look at Netflix. Of course, during the pandemic, the height of the pandemic, people started putting out quite a lot of data about Netflix. Their value now is over $300 billion. So they more or less doubled their value during the whole pandemic. They're more valuable than ExxonMobil, more valuable than Disney, more valuable than even Costco. But what do they do and what makes them valuable? They basically use data for their business model. They use big data analytics. If they want to come out with a program, for instance, they look at your viewing history, right? So they know, okay, maybe Sandra likes to watch Orange is the New Black. And so they'll be forwarding, oh, you're laughing, so I guess you probably like to watch, right? So today, throughout the day, they'll be giving you some insights to their program, sending you messages. They actually use data. They've come out with these reports, right? They've used data in a way that they know how many clicks you would make on your remote, how many times you visit particular programs. Then with your viewing history, they now create programs that are tailored to your taste. They know the big spenders. They know those who buy bouquets. So they have data. They have close to 200 million customers. It's not like they're dealing with little data. But because people trust them enough to be able to manage data the right way, then they feel free that even though Netflix is doing this, but we understand that they're doing it for a particular purpose and they're managing our data properly. Now with the GDPR, and in certain countries, like for instance, Nigeria has its NDPR, Ghana has its own DPR. A lot of countries are coming up with their own DPRs as well. You're seeing that shift towards coming up with the right type of policies that would constrain most of these service providers in how they manage and use data. And I think with the awareness that is going on now around the use and management of data, policymakers would actually have a lot to do, in coming up with the right type of rules for usage of data, so that it doesn't stifle innovation on one hand, but also doesn't compromise privacy and confidentiality of personal data. That's my take on this.
Thank you very much, Davidson. And it just emphasizes the point that a lot of advocacy is needed. And I was smiling when you spoke about Netflix harvesting its data and understanding what my likes are. We can discuss what Netflix has found out about my viewing habits after this session. So we'll leave it at that. But the fact of the matter is that data generally is used for more good than bad. When we see how data is being used in the agricultural sector, in the health sector, there's more case for use of data than to ban its collection and processing. So I'll just move over to the next question. Janet, are you there?
Yes, I am.
As I mentioned earlier, you're doing a lot of work in cybersecurity, and we've just spoken about trust and privacy. So the next question is, how are you helping clients build trust in the context of data compliance and use?
Of course, one of the things that most clients, especially the ones who are regulated, are usually concerned is just about the non-compliance and the repercussion that comes with non-compliance from the regulator. So of course, one of the things we are really insisting on, especially in light of the new laws that we have, is you have to comply. when there's a regulator in place who's enforcing most of these obligations, you must start complying. Again, with the EU GDPR, we were advising most of them as a competitive edge, you need to have some sort of compliance to enable you in get some sort of trust or confidence from your business partners. So now with the compliance that we are telling them, it's just not compliance on paper, because it's one thing to have all the policies in your database saying that you have this policy, you have a breach policy, you have a reporting policy, you have a access rights sort of policy. We're telling them they need to inculcate them in their day-to-day operations and in their day-to-day culture. This means training, sensitization, changing their business operation procedures to sort of inculcate a sort of sense of data privacy in how they deal whether with internal sort of personal data, customers' personal data, and whether they're engaging with third parties to sort of process personal data. So other things that we have seen other regulators in different sectors do, like our central bank here with the enactment of the cybersecurity laws, issued guidelines to financial institutions and told them, the law is here, while we might not be in charge of implementing this law, these are the minimum requirements we want from you as financial institutions that we supervise and we have oversight. So it gave them a list of things they're supposed to do in order to comply and how they run the operations. And it even told them that we need to see you reporting on things to do with cybersecurity breach and everything as part of your annual compliance procedure. So those are the things that now as our clients will tell them, if you're complying on the back end with regulators and with business partners, what are you telling customers on the front end? How are you displaying that you've complied? How are you displaying that your processes are transparent, they're fair, they're compliant, they're up to code with the best practice standards? So this is when we tell them to take the next level of just push the content out there on the platforms that you have and you enjoy and you engage with these customers. What is your website saying on your privacy policies? How are your apps designed? How is your cookie policy looking like? It doesn't matter that we're in a country where there might not be regulations, but that doesn't stop you from going the extra step and looking at best practice globally and sort of ingraining it into your product development or service development for the client customer facing sort of engagements. So going forward, we try to ensure that even in terms of compliance, it's not a one-off sort of situation. We are not telling them you do it in January, you relax until the regulator comes knocking again for the next year that you need to be compliant. It needs to be a process, and it needs to be something that's continuous and daily, and something that's demonstratable, easily demonstratable from how they run their operations. So that's where we are right now in terms of just ensuring that our clients build trust in the context of data compliance.
Very interesting, Janet. Benson, do you want to comment on this question as well, particularly from the perspective of where there is resistance from clients?
Well, yes, thank you, Sandra. And I agree with everything Janet has said. And I wanted to pick this question from where Davidson left on the issue of transparency for data. So for us to build trust, we're advising clients to be very transparent as to what they're doing with the data. What data have you collected from where? How are you going to use it? Where are you going to store it? I mean, of course, it's based on regulation, but it also comes from the history of where we're coming from. We would know that even before GDPR, we had the Screams case. We had the Screams case, which now changed really the whole framework as to what to do with data. Before the Screams case, and if I explain about the Screams case, we had a gentleman who was Irish who sued Facebook in the European Court of Justice because Facebook had transferred its data from Ireland to the United States and used it. Now, as far as Facebook was concerned, the law as it was in the EU protected them from what they were doing. In terms of they had a clause in the contract to say what the data was for. They explained what the data was for. The court said that besides just explaining what you're doing with the data, you need to also go a step further and protect it. And the protection comes because we have different legal regimes where the government, whether for security reason or whatever law, can get into people's data. Now, when we're explaining to the clients how to build trust, the first start point, just following up from Janet, is to actually be very transparent. What are you collecting? Where will you use it? Where will you store it? The second one would be, because of the global nature of business, is to try and map out for a client, which jurisdictions do you work in? Now, what are the similarities in the jurisdictions on the data protection laws? What are the differences? And how do you then comply with all of those? But coming closer home, I think in an organization, and especially in the question of resistance, the security of the data is paramount in building trust. So how do you explain to the stakeholders, and there are many, whether it's your regulator, your insurance company, your government, your shareholders, that the data that you've collected is secure? I mean, we just mentioned about Cambridge Analytica. How do you ensure that it's secure, and what steps do you take to make sure it's secure? I echo Janet's word that you need to build a culture of data security. Specifically, we have a drive now towards even putting in your employees' contracts an acceptable use policy for the data. You go a step further and work around your password protocol and ensure that your password protocol is very, very strong, so that internally you know that the data is protected, and externally you're able to explain that this data is as secure as can be. Sandra, that would be my take, of just following up from what Janet had said.
Thank you very much, Benson. Some really good points there, really good points there. And I think it's a perfect springboard to go to the next question. Davidson, I'm coming to you. I can see you there raring to go. I know you come from a country and practice in a country where you've got a very active regulator. So I'm going to ask you this question, which is, what is the level of compliance like? Have there been any important cases, investigations that you would like to highlight, and or practices that have shaped the industry perceptions of data protection?
All right, thank you. So in terms of compliance, right, I would say that, to be honest, there's actually a growing level of compliance. Just before I came on for this meeting, so there's a client of mine, they're a fintech company, and I've been telling them that there's a need for them to carry out a data compliance audit, but they had been dragging their feet on that. But just this afternoon, they told me that a bank that they are trying to partner with has actually demanded that they have to produce evidence of having carried out a data protection audit. Now, what that means in itself is that it's getting to the point where certain companies that we know typically process data, like banks, fintechs, retail stores, and e-commerce platforms, would not be able to carry out business really, unless if they show compliance. Now, so in Nigeria, like Sandra said, we have a very active regulator in the National Information Technology Development Agency, short form NITDA. It issued the NDPR, which is a replica of the GDPR, but with some additional things. What it did was it placed an obligation on companies that process the data of between 1,000 to 2,000 data subjects to conduct an audit annually. Now, that to carry out that audit, what NIDA then did was they licensed what are referred to as data protection compliance organizations, short form DPCO, that have to carry out those audits annually and then file the audit report with NIDA. And NIDA now gives a certificate of compliance. So then companies are now expected to show that they have compliance. So if you fall within that category, then you're supposed to show that level of compliance. Now, where you fail to comply, or you or there's a data breach, or there's information around how you misuse data, then NIDA can actually fine you. And where you process data of a particular number, then your fine is 2% of your gross revenue, and where it is of a lesser number, then it is 1% of your gross annual revenue. So with those kind of compliance mechanisms and of course regulations in place, there's a level of substantial compliance. Now, there was a fintech in Nigeria that was actually fined maybe about 2 months ago. The fine came to about 5 million naira, which in dollars now maybe about $10,000 US for failing to comply with NIDA's directives by carrying out the audits. And when NIDA investigated them, they realized that their data compliance, compliance was all over the place. So there's a strong need for compliance now. And like I had earlier hinted, you will not be able to do certain things without showing that you have complied. When there's a data breach, again, you're required to notify the data subjects and need that within 72 hours of that data breach taking place. The failure to do that, of course, would attract some of these fines. So what they're now seeing is a lot of these companies are now reaching out to the DPCOs. There's an improvement in their cybersecurity mechanisms. Data protection policies are all over the place now. I would say it has also created avenue for TMT lawyers to be able to advise clients on most because you're talking about privacy policies, terms and conditions, terms of use. These are all the things that the regulator is enforcing and saying that they have to be on your platforms. You know, so yeah, we're seeing that we're seeing a surge in those kind of activities now when it comes to compliance. It's not there yet, but you know, there's a heightened awareness, especially with the large companies and the ones that will typically process a good number of data.
Absolutely, Davidson, and I'm really glad that you answered this question in the way that you did. You did mention DPCOs, and for anyone who's not familiar with those initials, that stands for Data Protection Compliance Officer, and they have been very helpful with regards to the regulator in ensuring compliance. And it goes back to what we've all been saying, which is that data protection lawyers are actually evangelists for doing the right thing where data protection is concerned. It's a lot of advocacy. I want to move to Jennifer. Let's talk a little bit about telecoms, right? Telecoms is crucial to the backbone of any economy. Communication has massively improved over the last few years. And I'm going to ask you this. What are some of the current opportunities in the telecom space in Africa, and how will this benefit the continent?
Thank you, Sandra. Let me start by painting the picture. So according to the GSMA, there are currently about 800 million mobile connections in Africa and about 300 million mobile internet users. They also estimate that mobile data consumption in sub-Saharan Africa will quadruple by 2025. This will be spurred by increased smartphone adoption and availability of affordable high-speed networks. Now, I have a standing joke with my friends in Kenya that whenever we meet socially, everyone is on their mobile phone nearly all the time, which I find really rude. But the point I'm making here is that the African consumer has a huge appetite for data, and there's about 1 billion of us on the continent. So there is a high demand for data. And this high demand for data is driving demand for connectivity and therefore presenting opportunities for investment in digital infrastructure. And actually, when you look at the past year, this is one of the sectors that has withstood the challenges of the pandemic. We've continued to see sustained transactional activity across all verticals, actually, from towers, fiber and broadband to data centers and cloud, and I expect this to continue. The second important trend that we're seeing is the evolution of the telco. Now, telecoms operators, not just in Africa, but globally actually, have realized that they need to adapt new business models and diversify their revenue streams in order to remain relevant in this very competitive digital age. So we're seeing telcos adopting platform models and looking beyond voice and data to digital services such as fintech and the Internet of Things. Now, as I mentioned earlier when I was speaking about the figures, these mobile operators hold the highest number of consumer relationships, and they're also sitting on huge amounts of data. And we talked about, Davidson mentioned, data monetization, and telcos are now really focused on monetization strategies to realize value from this very important asset. And so these trends are presenting opportunities for strategic alliances, collaborations, joint ventures, etc. And this is not just within the industry itself. Again, Davidson mentioned about his fintech client that's getting into collaboration with the bank. We're seeing a lot of JVs and collaborations and strategic alliances, particularly between telcos and banks. We're also seeing telcos continue to dispose of their non-core assets, such as towers, and they're doing this in order to free their balance sheets for more strategic investments. So that will also mean continued M&A activities in that space. And then finally, we're also seeing some market-specific opportunities. Ethiopia is currently the investment hotspot. I think we've seen most of the telcos, African telcos, who I'm sure are backed by deep-pocketed financial investors, battling it out for the 2 greenfield licenses that are on offer in Ethiopia. And we're really keeping an eye on that to see how it plays out. But you've also got markets like Uganda that I think still have too many players. So we will inevitably see some consolidation plays there. And so all of this will have a huge impact on the African economy. I think that investment in digital infrastructure will drive growth in technology and tech-enabled sectors, helping businesses to really realize the gains of digitization through operational efficiencies. I also hope, I don't know if this is kind of being too hopeful, but I also hope that technology will streamline government services and enhance transparency. And all of this should really have a significant impact on GDP. And actually, I think the GSMA is predicting that the mobile industry alone will contribute about $184 billion to the continent's GDP by 2025.
Thank you very much, Jennifer. Davidson, do you want to add anything to what Jennifer has just said?
I mean, again, speaking after Jennifer means that she's already done, quote and unquote, now the dirty work. So I don't really have much to do other than to gloss over a few things. But I think she's hit on quite a number of things. They're very, very germane and probably taking out part of what the black portion of what I was saying. What I would don't say in addition to that is, of course, what COVID-19 did was that it opened up so many opportunities and let us see there are a lot of uncharted waters. You know, right now there's a higher demand for data storage, bandwidth, interconnectivity. You know, you see a lot of organizations now moving towards cloud computing, fiber internet, data centers springing up. These definitely need the approval of the telecom regulators, as well as need a lot of expertise from the telecom sector as well. You would look at a lot of things. I mean, they're basically tied to internet connectivity. Everybody was looking forward to the rollout of 5G on a wider front. There were the conspiracy theories, but I think that in itself would also become sector further. For those who are familiar with what's been happening to the African continent, there's the Africa Continental Free Trade Agreement as well that you know, encourages investment in the telecom space in Africa. So with the young urban population that is growing, I think the potentials are quite limitless, you know, when it comes to telecoms in Africa. But I'll leave it at that because of time.
Thank you very much, Davidson. Again, some big points there, lots to unpack there. So I'm going to come to the big, hairy question. Benson, this is addressed to you, and it's to do with whether regulation should continue or otherwise. As lawyers, it's almost abhorrent for anybody to talk about there being no regulation whatsoever. But the question really is this. Some people see regulations as a barrier to innovation and creativity, and I have argued against regulation in the TMT sector. Should we do away with regulation? When you look at jurisdictions like the UK and Singapore and their approach to regulation, what are the takeaways for the regulators on the continent of Africa? Over to you, Benson.
Thank you, Sandra. You know, that question reminds me of the philosophical question of a leader is born or made. I don't think there's a right answer either which way. I think there's merit regulation in some instances, and in others there's no merit. So I'll take maybe one or two instances for both. If you have regulation that constrains innovation, you have regulation that is not risk-based, it constrains innovation, it's not risk-based, it's result-based. Take an example of what Davidson said about the annual audit for the consumer of data. Now, if you have something that adds red tape to it, so every year we do an audit and then we file the audit, nobody reads it, nobody does anything to it, then that will just take away from precious time of doing things. But having said that, and I know I digress a little bit, there is a question as to whether that particular audit is something we should consider to be putting in our annual reports for our shareholders, back to the question of building trust. We're coming from a history, especially in Africa, where you have the government doing business. You have a lot of our telcos initially being government monopolies. In some countries, they still are. Now, if you get places where regulation is built to protect those monopolies, then that regulation is not serving its own purpose. It's not serving the purpose. And thirdly, again on this point, if you have regulation that is inflexible, the rules are cast in stone. You must use this technology, and if you don't, you must do so and so. It will not work, because, like we said when we started, technology is way ahead of regulation. We have cases, for instance, in Kenya, we have a mobile money platform called M-Pesa that when it came, the regulator then said, let's first of all watch and see. We will regulate it. As and when we are clear about what risks are, then we figure out how to regulate it. And I'll come to that when I look at the Singapore angle. So for those three reasons, I'd say, yes, it can be a barrier to technology, but it can also be an enabler. A case in point would be, if you look at the renewable energy sector, the moment environmentalists lobbied for many things, including use of power that is protected, like in the EU, you're saying if you use domestic power, you must use low voltage power. What happened is that industry went overdrive and they became innovative. They were able to pivot and decide, look, we have to be innovative. Right now, we are in the pandemic, and because of different regulation, whether it's lockdowns or otherwise, look, we're doing this webinar in 5 different countries on Skype, on Zoom rather. Regulation can also help in consumer protection and can also help in leveling the playing field. So I would say the real answer is, when do you regulate, when don't you regulate? And that's where the case for Singapore becomes good. Because what Singapore has done is that they have combined what is both a business-friendly regulatory framework and research-based regulatory framework. They have what they call the monetary authority system, who research a lot about what regulation should be, why it should not be there, is it facilitating innovation, is it better to manage it through policies, what are the risks if you regulate? And what that happens is that this authority by itself works together with the industry before they even regulate to find out what are the risks for whatever technology. And the go-to thing is that before you understand the technology, move forward, let it go on, and then once you understand the risk, regulate it. But you also need to be flexible with it, know that it can change, and if it changes and you have to change, you then use a data-driven thing. They have created what they call a regulatory sandbox, where as a regulator, before they go to regulate, they're able to sit down with all the stakeholders and understand what are the risks for whatever is happening. I think probably to touch on the UK, but again, defer to Jen on that. I know there's a big drive to level the playing field. There's a big drive to go towards data sharing, so that from where I sit, you can regulate only if you regulate from a risk-based perspective, and you're pushing the industry to be the best it can be, because we do know that tech has more good than bad. Thanks, Sandra.
Thank you, Benson. And those are some really great answers for us to unpack. I'm conscious of time, and I did promise our attendees that we would attend to their questions in the last 15 minutes. So what I'm going to do is I'm just going to move to our last question, which I'd like each of you to respond to. We'll start with Jennifer, then move on to Janet, and then Benson, and finally Davidson. And the question is this: what does the future hold for technology, media and telecommunications, digital technologies, new layers of protection, opportunities and challenges? What does the future hold?
This is my best question, actually, because it's very exciting to always look ahead to the future positively. So I'll keep it very brief. I think we're moving to the age of intelligent connectivity, powered by 5G, artificial intelligence, and the Internet of Things. And what this means in practice is basically that we're moving beyond smart devices to smart homes and smart offices, and ultimately to smart cities. And I expect countries like Rwanda that have achieved nearly 100% 4G connectivity and have a clear digitization agenda to lead the way in Africa. The second thing is, I think data, and we've talked about data a lot today, clearly it will become more relevant as businesses begin to understand its true potential. I think we will see a shift from compliance to monetization. New technologies will enable real-time data analytics and decision-making, and with the proper legal frameworks in place to protect privacy and prevent AI biases, I think this will ultimately enhance consumer experiences. And what does it mean for lawyers? I think technology lawyers will remain extremely busy, helping clients navigate risks, but also leveraging these new technologies to spur growth. But it means we need to stay on top of developments, but also be able to look around corners and anticipate risks and also anticipate policy direction.
Thank you, Jennifer. Janet, over to you for the final question.
Davidson was right. Once Jennifer has already spoken, it becomes a bit hard to top up what she said, but I totally agree and align myself, because as a country, what we are looking forward to is we had the breakthrough with what Mr. Ngugi called M-Pesa, and a lot of innovation we've seen in Kenya, especially on payment services and fintech, has been centered around the whole mobile money transfer. So as a country, what we are looking forward to is probably app-based sort of cash transfers, because those are not yet allowed to operate, or are not, the central bank has not yet really known how to govern them or how to really operate, sort of supervise them. So we're looking forward to sort of app-based, web-based sort of cash transfer applications. We are looking forward to more regulations from different regulators and from the government in terms of the players that are in the market that found a gray area and have been operating and thriving, and have raised a lot of consumer protection issues which the regulator is really grappling to deal with. So that's what we are looking forward in the near future. The other thing we are looking forward to is the whole synergy between the different ecosystems and digital service providers, as well as government plugging into this whole ecosystem to sort of drive public service delivery to the next level. We've seen in our country so far, we've seen several government offices digitize their services. The Lands Office, where most land transactions are held, is next to digitize its services. And we're just keenly looking forward to how this will sort of reduce corruption issues, fraud issues, and also improve service delivery to citizens. So that's what we are looking forward to as a country in the next few years. But as a lawyer, like Jennifer said, we are looking forward to a lot of keynotes and a lot of work.
Fantastic. Tech is a real enabler. Thank you. Benson, over to you.
Briefly, Sandra, just after the two nice ladies have spoken, so I'll keep mine short. Reminds me at the height of globalization, where the saying then by the scholars was that the world is flat. With tech with us, TMT sector going to the future, I think the world is now virtual and we are now borderless. So I see a lot of opportunities and growth. My take home would be for the players, for the regulators, for the shareholders, for the stakeholders, harmonize internationally as much as possible. And I think, I mean, it's a goal that is achievable, harmonize internationally. For the government and the regulators, just to remind, as of the lessons from the Singapore and the Asian countries, that strong government support will lead to investment and innovation. So I think for the TMT sector, the future is bright for everybody who's in it.
Thank you, Benson. And final words from Davidson.
Well, I like that, final words, yeah. Well, so I think there's a lot going on in the TMT space, right? You're looking at blockchain technology, you're looking at cryptocurrency, you're looking at virtual assets, digital currencies. Central banks are looking at that, you know, as the next thing that they're going for. You also have things like stable coins, now the NFTs, non-fungible tokens, the Internet of Things, the Internet of Medical Things. where you now have, sensors, devices that allow patients to do the monitoring remotely. There's a surge in artificial intelligence. You see so many tech companies on the African continent are rising in the different sectors, be it health techs, agri-techs. So many funding rounds taking place, right? Paystack, Flutterwave going unicorn. So I would say that in the TMT space, there are limitless opportunities that arise because one thing always builds off over the other. E-commerce now is big as well. Again, building off the back of something like COVID-19, which required a lot of us to do our shopping remotely. So in Africa, you typically see people, they like that communal living. We like to go to the stores so that you see your friends, all of that. But with some of these things having to make us shop and work remotely, it now means that we order those things ourselves, thereby growing the technology space. Of course, media, you see a lot of that happening, a lot of streaming platforms, now seeing the opportunity to create their own movies, and put them out there on the platform. So now you don't need to have so many cast and crews to get things done. There was a movie that I watched recently where it was filmed during the lockdown and it was a very lovely film. You wouldn't know that the lockdown was going on. That was enabled by, TMT and itself. So again, like my sisters said, there will be money for the lawyers because people need to advise us, right? I'll put this out there that it's been quite backbreaking during this period because the questions keep coming in on so many things that are happening. But I think it's good for the continent and it's good for the lawyers as well that choose to specialize in that space. Those are my last thoughts.
Thank you very much, Davidson. And I think that the panelists have confirmed what I said at the beginning, which is that they are seasoned experts, very well-versed practitioners in the TMT space. They have also shown that TMT is exciting. Pandemics thrive, innovation and creativity thrive in pandemics, and that is what we have heard, and it is what we are all experiencing. This actually brings us to the end of this part of the discussion. I'd like to say thank you very much to our panelists for their insights and the information that they have shared with regards to the questions. I'd also like to say thank you very much to the attendees for listening. I can see that we do have some questions in the Q&A. So I'm going to hand over to Legal Services Igeria, either Harry or Duncan, to read through the questions and have our panelists respond in the time that we have. Thank you all.
Thank you, Sandra. So we have about 6 minutes, so we'll try and get through these as quick as possible with as much detail. And if we could please keep the answers to 30 to 45 seconds. I know you really enjoy speaking, which we absolutely love. So starting with our first one from Alan Baguma. Given that data is an asset that we give to tech companies for free, what are your views on the possibility in the future of users being paid for their data?
Harry, I think you need to allocate the question.
Oh, well, I'll let Sandra allocate it as she knows the panel so well.
I was going to say, who wants to take that one? It's a good question, and any one of you can easily respond to it. I can
Sandra,
see
you too.
Jennifer raising her hand.
Yeah, I mean,
go ahead, Jennifer. Jennifer, go ahead, please. Go ahead. 30 seconds, because we've got 7 questions to go through.
Sure, this is a debate I have with my friends all the time, because I'm such a huge fan of technology and all the good things that come out of it. And I think for all the benefits we enjoy from technology, we have to realize there is a cost to it. And so I would say I think it was Alan that asked the question, do you pay to enjoy the benefits of Facebook, from connectivity and so on? Facebook makes money from ads, and the business model is all around, giving access for free to users, in exchange for using the insights that come out of the click data. And also, I mean, I'm being controversial here, but the personal data, the bits that people really care about, I don't really think that's where the value is. The value is behind the click behavior, and when you anonymize and then combine that data at scale and the insights it brings, and that's where the value is. And I ask, to whom does that data belong? Leave it out there. So those are my thoughts on it.
Brilliant, thank you. We now have a second question. This one is actually for Jennifer from Sonali Sharma. You mentioned that telecoms are diversifying into other avenues. However, in markets like Kenya, where Safaricom Mpesa has been a forerunner in mobile money and facilitated such ease in doing transactions, do you foresee that the proposed split between Safaricom's telco business and mobile money business might deter telecoms from diversifying into fintech services, as it also creates an environment of added regulatory scrutiny by competition and telco regulators?
Gosh, it's taken you a whole minute just to read the question. I'll try and keep this brief. So 2 things. One is, I don't actually think that telcos should fear competition or regulation. I think this is good for trust, and we've talked a lot about consumer trust. And so, if regulation really has the consumer in mind, the business should also have the consumer in mind. And so telcos should be working towards models that enhance consumer experiences. But secondly, I actually think that telcos want this because they've got their sort of traditional operations, so that typical sort of very capex heavy, highly regulated telco operations. And then they've got this new sort of value added kind of, digital services. And I think it actually makes business sense to split, because that means they can just ring fence, some of these sort of emerging and very exciting and very lucrative business areas from the burden that can come with very heavy sort of telco balance sheets. So I actually think it's a positive trend, and I don't think telcos fear it. I think MTN have also announced that they want to do a split. So that's what I think.
Brilliant, thank you. Our next question from Peter Cole Onell. It has been argued that the biggest challenge to the proper regulation and application of artificial intelligence, fintech, and modern day innovation as a whole on the African continent is the lack of understanding by the regulators. What is the take of the panelists in regarding this? So I'd say, shall we go to Davidson to answer this?
All right, thank you, Harry. I mean, I would definitely have to agree, and we see a fair share of that in Nigeria, for instance. So no clear case regulation for cryptocurrency, right? What does the Central Bank of Nigeria do? They prohibit banks from allowing people who trade in cryptocurrency to bank with them. That's just, cutting your nose to spite your face. All right, so people are doing robo-advisory and trading in foreign shares. What does the SEC do? They ban that as well. And what is quite concerning is that those bans are put out there with no clear-cut mechanism around how to cope with it. So what you then do is that you stifle innovation in itself, because people are basically begging you that regulate us, but you are incapable of doing that. So let them self-regulate or something. So I think maybe what would help is if the regulators start having more private sector folks going in there who understand how business is run, then they'll be able to advise them, or maybe have more intergovernmental public sector sort of committees that can come up with framework on how this can be be taken care of. But it's definitely a problem on the continent, and I think we need to find a way around it. The regulators need to understand how businesses work, because it's not working.
Brilliant. Thank you, Davidson. And we've got time for one more question, and I'll go to Benson for this one. Are regulatory sandbox approaches becoming more common and generally accepted as a way of balancing the regulator's desire to regulate and the need for innovation?
Thank you, Harry, and I'll pick up from where Davidson left. I think the sandbox is the in-between to make sure that regulators understand what business is about, what the risks are. Yes, it's becoming common. I think it should be the best practice. before you regulate or before you refuse to regulate, you just understand together with the people in the field as to what the technology, the innovation is about, and back to the main thing and what the risk is. So are they becoming common more and more? Is it the future? I would hope so, because that would bridge the divide between the knowledge of the regulator and the interest of the market. Thank you, Harry.
Brilliant, thank you. And I think that takes us to the end of the session, and that leads me to say thank you to Janet, Benson, Sandra, Davidson, and Jen for joining what was a brilliant session. We have really enjoyed it, and I hope those of you who are delegates watching really enjoyed it as well. And that just leads me to wish you a very good afternoon, and if you'd like to join our closing remarks now, you are very welcome to. Thank you very much, all of you, and have a lovely day.
Thank you.
Thank you. Bye-bye now.
Bye-bye.